For the 6 months to 31st of December 2012, ARB delivered a very pleasing set of results. Our revenue grew by 39% to 965 million for the 6 months. Our headline earnings were up some 17.5% to 18.43 cents for the period. What drove that growth was very pleasing contribution from our recent acquisitions, specifically Eurolux, which returned a sterling performance, as well as the inclusion of industrial cable suppliers acquired in July, which contributed to both top and bottom line growth. In the tough trading times that we find ourselves, we did face some headwinds and we saw some margin pressure or contraction in our electrical wholesaling segment. However, this was more than offset by the contribution of our acquisitions, resulting in the almost 20% increase in headline earnings. One of the stellar or key aspects, most pleasing aspects of our results for the last 6 months was the continued strong cash generation. I think this has been a hallmark of ARB over the years, and I'm very pleased to say that over the last 6 months, our cash generation was stronger than ever. In fact, we generated some 111 million rand of cash from operating activities, notwithstanding the increased working capital requirements that come associated with a 39% revenue growth. Looking forward, we see continued opportunities for acquisitions. We have the appetite as well as the balance sheet. We have a completely ungeared balance sheet. We have a very strong cash position, and we'll use that to grow the business even further. Where we see growth opportunities is in continued expansion of our electrical wholesaling business to gain further market share. We see the SADC region in particular as being particularly attractive from a growth perspective. A lot of foreign direct investment going into those regions, a lot of investment going into that region, and we're looking north of the borders. We do have a conservative approach to Africa in that we see a lot of risk, a lot of credit risk. We see a lot of political risk, but notwithstanding that, we see a lot of growth opportunity, and we will be exploring those, as we have always done, very judiciously, but we do see growth coming from the rest of Africa. We'll also continue with what I term related diversification. Eurolux was a prime example, closely related to electrical product, but a category in its own, and that has been very successful. We'll continue to look for opportunities to expand the product base that we offer, and that will be through an acquisition strategy. In the short term, looking forward to the balance of the financial year, we think that the current tough trading conditions that exist out there will continue. I think a lot depends on whether the much vaunted public infrastructure spend actually starts happening. But our view is that we think that the tough times will persist for the next 6 months, certainly. Notwithstanding that, though, our acquisitions will continue to deliver growth. We'll see the full benefits of the industrial cable acquisition coming through in the second half. And we'll see the benefits of the Electro-Fruman acquisition, which weren't included in these results, contributing. So looking forward, we believe we'll continue to deliver top and bottom line growth, notwithstanding the fact that the conditions in the market generally are expected to continue to be tough.